Good afternoon and welcome to the end of day review for today. And today is Tuesday, April the 1st, 2025. So it's the first trading day for April, for the month of April. But it's the second day for the trading day of this week. And we are start this week on week 14, which is the first week of quarter two. So quarter two is start right here. So start April right there. So we still have overlap one day left from March, but the already start counting to the week 13 right there. So what we are in this week, the very first week at quarter two. Let's see how this quarter come out. Right? We see that the last quarter is a down one, right? So quarter one right here. That's the quarter one. January, February, and March right there is down close. Last year, all four quarter up close. So it's the first down close right there. Very here significant. We have three quarter down in the row. It happened in 2022 right there, which is a COVID year right there. Other than that, we only have one quarter out. So let's say very interesting to see. By the way, we still see that it's still test from above right there. So, and we still have last test from above right there. So let's see how it's play out. It's still too early to. It can go either way. And this week we have the non-farm payroll. Right, it's another name called employment situation. Basically, it's the job created employment number right there. It's a little bit different than jobless claim, but that's unemployment. It's employment. And then we have a little bit out of calendar right there is Jerome Powell is the Fed chairman have speak. So let's see if any impact on the markets. Normally, every time a Fed overheat mouth, the market will react. So, all right, and yeah, that's it for the economic event or economic data right there. So the big one for this week is non-farm payroll, because every first Friday of every month, right? The first Friday of every month they release the non-farm payroll. And on the non-farm payroll, I think we did a deep dive or a special recording episode for us. We can revisit that. Alright, so for today is Tuesday. If we look in the, by the way, before we go to detail, we want to bring to your attention that the discrepancy between the Thinkorswim charge and TradingView. We have a Thinkorswim account because that's the account we have for the real money. Before we try on check the Top Step Challenge, which is Top Step Challenge use a different platform. They use TradingView. So maybe the data providing the service data different, and the reason why accurate is different. But it's very interesting. All right. So if we look on the TradingView, here's the daily aggregation. Basically, yesterday, the Monday, it did rate the sell side of this. So it looked like a double bottom right here. It will be nice if it break below this and it create a full breakout this level. That will be more interesting than right now. It just rate a sell side and boom, is retrace. So basically, maybe retrace. Let's see how it's play out. We love to see break below that level and formation a reversal for breakout reversal type 1 or type 2 right there. But anyway, go back here, we see that it did break a sell size. However, if we look on the Thinkorswim, we can see that the buy side liquidity did not happen. You see that? So I make a higher high, but here it's make a lower low. So we saw that very interesting. So we go online and we double check to make sure which one is more correct. At first, from our bias, we thought that the top step or trading view is less correct than Thinkorswim. That's the bias. But actually, when we check online, we check a I think it's XP future charts, and we go to investing. Right, it's one of the well-known website for that matter. We check, we see that actually from their charts, the daily right here, you can see that actually here you see that it matched with the trading view. So at least we have someone cooperate with the trading views. At least trading view is better. So from now on, we will try to treat trading view as a primary source. Before that, we treat Thinkorswim as a primary source. But from now on, we're gonna treat trading view as primary source for chart right there, price action right there. Yeah, that's one of very important point we want to bring to your attention right there. Show you why we do what we're doing. So because this discrepancy or the difference between the Thinkorswim and TradingView, we decided to go with the TradingView from now on, because if you look at this, it did take the sell side right there, make a low. Then when we go to the 15 minutes, you're gonna see it make a lot of sense that we should use the Thinkorswim. Because right here, you go to the 15 minute yesterday, right here, that is the 8:30, that's the Judah swing that ICT talking about, and that is where it rate the buy side liquidity right there at that level. Right, you see that? Let's look on the Thinkorswim right here. It gives us the yesterday. See that? That's the Judah swing right there. And let's look at the right here. Oh yeah, what's this is 15 minutes. That's right. So right here, you see the level that it rate, but on a low time frame, actually it break the level and then it reverse right that away. It manifest itself in a high time frame is a test, a long wick in the bottom or test from above right there. Beautiful, that test, right? So if we know that the likelihood that after it break the low, make a low, it retraces right away, it reverses right away. And that's a condition that we add into the Judah swing at 8:30, the model that ICT developed. Yeah, so here's is the model that ICT calls the Judah swing at 9:30 right there. In this case, I think he may use a 5-minute timestamp. 5 minutes will be slow. 5-minute time frame. That's why you see the double bottom right there. But in this case, we use a 15 minutes time frame. Then you can see it's break and it reverse right away. Yeah, it rate the previous day low or the PM right there. In this case, it rate the previous day low right there. It rate, and then it hit the high time frame level. Yep. What's the high time frame level? I guess it's hit straight high time frame level. What level is that? Maybe it's not on the. Yeah, maybe this level. Or what level is that? Oh yeah, we see that candle. No, it's lower than that. Yeah, maybe this level right there. You see that candle right there? That's maybe the level. So just right there. Yeah. So the low of this is 53.33.50. So 53.33.50 right there. Look at the low time frame. $55.34. Yes, just right there. The low of this. So it go down only 1 point right there to touch that level right there. That's beautiful right there. But the key level is at this level. So if we want to go in early, we can go right here. We can go in early. Yeah, we put a buy stop right there. It break, that's no reason to come back. And you see, it also do make a low right here, or it rate the buy side of it is very reliable setup right there. So this setup we take because we know that is a Judah swing, and it look on high time frame. We just saw it rate the sell side liquidity and touch another level right there. Other than that, we don't have the setup that we normally have, right? The 4 breakout type 2 and type the 1 type 2, we don't have it right here. So in this case, it's just a Judah swing setup. And now we know why the wick is forming, because the Judah swing at 9:30 is just swinging to rate sell side of it, and boom, it reversed. Yesterday we did, I believe we took that trade. Let's take a look to see, did we take this trade yesterday? Yeah, let's find out. Yeah, he's here. We took the screenshot at 9:45, which is 1 minute before it's closed the candle at 9:30. So here's the, you see that? This is the daily time frame right here, and you see that it break the low of that right there, and it look like it can coming down. That is the Judah swing right there. So you see that exactly 1 minute it follow. It look like it kind of falling, but it reverse. That's which why it create a long wick in the bottom or test from above right there. That's the beauty right there. Who would thought to go in and go long right there, right here? Unless you know the setup very well, then you go in and you buy right away. Because soon as it touched the level that it go down from mid level, then you can put a buy stop right there. Yeah. And we look on the weekly, it's similar right there. It just rate this low or this sell circuit and then boom, it revert back. Yeah, here the another screenshot we take right there at 48, right? We just 3 minutes into the candle 9:45. You see, it still look very scary to go long right there. But boom, we know we go in, we go long right there. We see it rate the buy side, and also we see on this end we know that it rate the yesterday low, and we see the huge swing at 9:30, so we know immediately it's a Judah swing. We go in, right, beautifully. We add just one contract to go in to test the water, and we still test the water. Let's see, we still test the water. We haven't aggressive, yes, boom, now we're aggressive. So at 6:53, so we go in, let's see what time we go in. Okay, so we go in at the candle 9:45. Okay, so 9:40 break and 9:45 erase. Yes, so we go in at the candle 9:45 exactly at 9:52. We're 7 minutes into the 9:45 candle. Let's see when we add. Okay, so we add it at 53. So we go in at 52 and add at 53. Yes, so just 1 minute later we add more contract. We add 10 more. All right, and boom, it really goes to our favor right away. It go into in the money right there. We become in the money right away. That means we get profit right away. And we look back at the daily time frame. That's what you see, right? It should be close. It go all the way down here. Now it start retrace back. Okay, so right here we have to make decision whether we're gonna take quick profits or wait for hit the target. That's when we check screenshot right there. Boom! Wow, we wait for hit target. Let's see if it hit our target. Boom! Hit our target. So it's a nice and big and handsome profit right there. Just one trade. I think just one trade. You're good for the whole month right there. Yep. So that's you just swing at 9:30. But here's the lesson we learned. We look back at the daily time frame. That's how we see that. And right here, I think we should call the day, but I think we take a short trade right here, and we only use one contract, so that's good. That's good to test out. But now we understand that in the Judah swing, don't try to go short. To wait opportunity to go long. You see that? This is a retracement and make another leg up right there. Don't try to go short. Let the run that after a reversal at 9:45, let it run another. You see that at 12 o'clock right there. So almost 2 hours, right? More than 2 hours. You have to let it run for more than 2 hours. So that's the Judah swing that we need to learn. Put the note into our case study or playbook right there. All right, let's do some no taking, right? Yuta swing at 9:30, and then it's reversal. Then, well, if the Friday low or the BM, right? Friday or the BM, Friday low, it's taken, and what else? And high time frame level hit, then we stay in the trade as long as possible. Okay, and what else? Or at least 2 hours. So that's the liquidity, time pay liquidity there. It's not about level, it's about the hour you stay in there. Because if about level, you may get exit the trade early, right? Yeah, we may get at the, yeah, if we based on level, we exit the trade a little bit early. Yeah, so that's a beautiful note we check right there. But let's see what else we say. You see that? We go back to the daily time frame. You see how different it made. Before it looked very scary, right? Who thought that? Look at the beginning. Go back right here. You see that? Who thought that it's gonna be a turnaround? Yeah, 360 right there. Turnaround right there at 8:48. But 3 hours, 2 hours later, you see that is a huge turnaround. Yeah, right there. It's at the 2 p.m. right there. Yeah, and we don't do anything until 2 p.m. We saw some setup right here. Yeah, right, we go short because you said that it break the level, attach from below, and have a rejection right there. So we try short right here. Let's see how we handle this trade. Yeah, we make mistake right here. I believe, boom. Wow, it cut our profit in half right there. So now we understand that the Yuta swing, don't try to go short. That's the note that we put all right. So on a Yuta swing, don't try to go short. Yuta swing day, 9:30, yeah, on a Yuta swing at 9:30 day, do not, yeah, we have to put a note right, do not go short, please. That's the note right there, do not go. It gives us, do not try to go short, and we pay the price. That's how we learn. We make mistakes, beautiful mistakes, and learn. You hear that? It's gonna hit that level at 56 or 52 right there. Because they look at the lower the candle. It break on last Friday, and now it go back to that level. That's what we mark the level right there. Exactly 6652. It marked that. It reached that level, right? We go short right here, and we get back half hour right there. We should not, if we want to try short, just short one contract right there. Test it out, because on the on a Yuta swing day, don't try to go short. We keep practicing until it become our muscle memory, second nature. So give room for failure, give room for loss, for mistakes, so we can grow. Because we cannot grow without making mistakes. So we have to embrace the mistake, the failure, the loss. It's okay. Yes, so that's it. We're done for yesterday right there. Yeah. All right, so now go back to, let's close this. Go back to today. Here's the 50 minutes for today. Today the story a little bit different. It's not so yesterday the Judas swing at 9:30. Today it's a different story. We saw this movie before. Basically, when the 9:30 open is in the range of the 18 open, and right there, and then it break down at level and then it reverse. But it not reverse right away. It not really fast moving like yesterday, but it have one more move. It's
The market
test
is
from
always
below.
open.
It tests from below, which is easy for to trade. I mean, yesterday you had to come in very fast and take a little bit risk right there. But today it gives you the signal. Today it's move very slow, and it makes sense. It makes sense. So test from below, you see that break test from below and reverse. And the reverse for today is at 10:30. Yeah. Yesterday the reverse is at what? 9:45. Just right after 9:30. But here it take a little bit moving. You see at first at 9:30 it tests from above. You see that? And then right here it looked like it's gonna go up, but boom, it's reversed. Yeah. Let's take a look real quick. All right, here's our recording at that moment. You see the 9:30 right there. It tests from above at the 18 low right there, right? That's the level 8 right here. You see that? Either that level. The 9:30. You see that level right there, right there. Let's do this so we can. Easy to follow. What is a horizontal raise right here? Mark the low right there. All right, you see that? That's the 9:30 test from above. So get ready for a short right there. But as soon as it break down the low of a 9:30 or that level, you're gonna see a test from below. It is not really touch the level, yes, but it's test from below. If you look at the level, it really tests from below and boom, it reverses. A little bit different than yesterday. Yeah, but you see the low right here, it fall into the yesterday BM right there. It not go past the PM and boom, it reverses. So by the way, go to this at 8:45, right? There's the candle 8:45 right here. So 4 minutes, so 45 and 49, so 4 minutes into the candle of 8:49. We thought that it's gonna go up, but we were very suspicious. We feel very suspicious and also step below, above the level, right? And this level, very suspicious, but for some reason we did took the trade here. It looked very attractive, right? That is the trap that the market do to the a novice trader right there, and we're a novice trader, which we still learning. Yeah, but we learn our lesson right there. So whenever you see this scenario, right, you see that right there around the range of 18 open, and then a lot of tests from above and right at the London range, and it's falling to the left in the range of the BM. Then boom, do not go long. Let's take a screenshot because it's very misleading. Exactly at that moment we go long. All right, we just take the screenshot right there. Okay. So the question is long or short right here. Right, that's the question which asks, and that is at 8:45 right there. Yeah, let's put that for now. save this one for case study. So we just save it. But for basic, the 930 test from above. Just look at that, the 930 test from above. And then what else we have? We have, yeah, 930, yes. And look at the London, it completely in the range of, and you see the gap right here, favorite gap right here, never retest a favorite gap. So we have a couple of conditions for it to go short in the short term, right there. All right, so we finished our ray up right there. So it's a flip at 9:45. It's flip. We thought it's gonna go up, but boom, it flipped. It flipped because the 930 already give us the hint, the signal. It test from above, and we see that the feather gap up right here never retest. So it's gonna go down, retest that. And we also have the London, it's a completely consolidation in the PM range right there. So this three conditions and the flip right here, it's just a setup to short them. Yes, that's what it is. And we make mistake, we go long. You see that? So let's see how we took the trade for today. Wait, here's the first trade we take. We go short because that's the 8 at the 6 minutes into 9:30. We thought, oh, it's gonna come down and it raised a lot of sell side already. You see that? A lot of sell side right here. And it did eventually, yeah. But the problem that we go in too early right here because that's a gap right here. You need to go up and fill that gap. Exactly. You see that? That gap right there. As soon as you see that beautiful right there, mark right there. You see that as soon as that gap is filled, then it retraces right away, and that is our inexperience in this scenario right there. We see liquidity, but we go in too early, my friend, and we add more contract. It's okay. So I think we got kicked out of that trade, or no? We add more, right? This 8:37 minute later, add more, and boom, it go back and it kicked our butt right there. Let's see, and we reached too much right here, too early, reach too early, too much. We should let wait a little bit, and right here it tests from above. You see that? It's so clear that it's gonna go down, but the trick is that before going down, it's gonna swing up, trap the people to go long. Look at that. That's what we call a flip right there. See that? It go up, take out right away. Yep. And now we live at naive right here. Right? The reason why we naive, we go long right here. We already suspicious that it can come down, but the reason right here because we already lost. So that's that experience or that emotion really drive us to chase right here. We should be reset our mind and refocus and go back to neutral. But right now we chase by the loss and try to chase them, and we pay. See that? And when we chase, we go big right there. We should not go big right here. Boom! Just two trade right there. You see that? Now obviously you go short right here. Beautiful short start from here. You see that? As soon as it take out the people who to go long, which is we did, then come on, you see that? We short them. Yes, short them. And we look in the daily, we say at least it's gonna go to the low of this candle, which is the last Friday. And I think we did correct. We put at there. Boom, it hit our target. So that's a beautiful trade there. So make one bad trade. Is that one bad trade? Two bad trade, and this is one good trade. And here's we had another beautiful trade right here. We go long. You know why? Because as soon as it break the 930, it reverse. So we know that at least it's gonna go to the high of the previous day, which is on Monday. Because we look on the high daily time frame, you see right there, at least it's gonna go to this high of the Monday high. and we let it run. Hit two beautiful trade right there. So beautiful. And we should let it run, but anyway, it's good for us right there. And now we see that it go past that prior day high right there. Okay, we take a short right here. We just go one contract because we see it right here. It hit the key level, so it may retrace. We take one contract and let's see. Okay, we add right here. We know that we marked it candle, right? It's gonna go to the low of the candle. And let's see. Exactly. Boom. It go more than that we asked for, and we get out right away. You see that? So we out. Yep. Yes, exactly. We out. Actually, it retraced back right here. If we don't out, we yeah, it go more than what we asked for, but it's okay. Oh, now we know that it go back to the low of this candle. Wow, that's the lesson learned right there. That's it for today. Thank you for your time and interest. We're always grateful for the opportunity. Day by day, little by little, in every way, we're getting better and better. We do what we love, then success coming our way. Have a great evening and talk to you later.